Good afternoon, everybody. Welcome to the Making Money Trading Stocks and ETF webinar for Friday. Today is the first Friday in May, and May 4th. When I was starting up, after yesterday's market move and then going into today, was really looking at, this moving forward as a whimper. However, today came out much more like a roar, so it's really quite interesting. Remember, everybody, that all the materials that we do present are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. A little bit about who I am and what I do. Most of you know me, so won't spend a lot of time there. Got a question for you. It looks like the majority of people here are also the premium members on active trend trading. Did you get your alert, your email for the 12 o'clock session? Yes. Okay. But it didn't work. You need to try the... Okay, you need to try it again. Yeah, it went out. It was really funny. The email system that we utilize to send out the alerts, for whatever reason, was not taking the edits today. So if you did receive it, the last two numbers on it, you may have to cut and paste it from your cut and paste it onto your website to be able to get into the session. Let me go up here real quick. There we go. And you know you have the right one because the last two numbers should be 99. Should be 99. I'll tell you what. I'm going to do this, make this a one-time thing since we are have been having some issues. I think I'll be able to copy in. Okay, I'm going to... There it is, guys. I'm going to send it out to everybody. And so you can copy that and paste it into, and we'll get started at the top of the hour of the following hour with that, with the trades for the final hour. And so we're sitting here watching. Very interesting. We've got a little bit less than 2 hours to go into the markets today, and the markets are holding the highs. That's very interesting and actually pushing up higher. I want to remind everybody that with our active trend trading, what we are after and what we do is basically follow the 5 pillars of active trend trading. We identify what to trade. In this case, we are looking at strong growth stocks and our premium ETFs. Now, we may trade one of several strategies on those, but here we're trading UCO. Actually turned out to be a pretty good trade. When to enter, we entered down here based on the active trend trading rules. I got in at 24.71, and then we identify where to exit. We did some classic technical analysis and also the active trend trading rules on where to get us out. And then when to exit, we wound up getting stopped out with a trailing stop just this past week, and so wound up with a nice little return. And so what strategy were we using in this? We were basically just buying the ETF. We also have strategies for options. What's the expectations? The probability of success on our trades is about 65%, which I'm very pleased with. Premium members receive, when we send out our alerts, they receive a little table like this, and it basically highlights what my stop is, what the 5%, 10%, and 15%, or correction, 20% profit targets are. And on the second half of this trade, we actually got out to about 29.18. So we were very close to a 20% return on the second half of the trade. The objectives of this webinar are to basically just to look at some timely action for getting into some trades going into the end of the week, or at least to keep things we want to look at going into next week. We'll do a real quick market review right now. As of yesterday, and actually this morning a little bit, the markets were slightly mixed. The markets were slightly mixed. However, they've all come back and have turned around and are moving up nicely, continue to move up nicely after about the first hour of the market. So here's where we're sitting. As of about 9 o'clock this morning, we're up nicely for the year, and we'll continue to press again our target. Our target for the year is to achieve a 40% return on the combined for the three strategies that we do follow. So let's take a look at the markets themselves. What are they telling us? I don't want that one. I want this one. And I just drew this in. Okay, here's the S&P. On a daily chart, yes, we're getting nice 2-day move up from the 2600 level, pushing on up here. And I wanted to highlight there's basically 3 levels of what we'll call the resistance formed by a trend line. There's one at these highs, and price action is pushed right up against it. Why does this look like, why is this an interesting level that it's currently at? Well, for one thing, let me get over here. There we go. Those. One reason why it looks very interesting is, see that purple dash line there? That's one. I think that's the 100-day moving average, and the 50 is this little green downtrend line corresponds directly with those. So we have some overlapping resistance in that area. Then there's the next one up. You can go up to this high, this high. There's another level of resistance just above the 50-day moving average. And then there's the longer term that we can see on the, there we go. The longer term that we can see from these longer term highs, which also corresponds here nicely on the weekly chart. So let's get rid of those really quick. What are we looking at? Let's get rid of that one. And that one. And the reason I drew those in there like that, folks, is just basically so that you can have an idea of, sometimes when you're drawing trend lines, it's not just one trend line that defines the trend. There's actually sometimes multiple ones and trends inside of trends. Like we're working inside of this larger wedge type pattern on a weekly chart. Well, there's also this smaller wedge pattern that we see right here, coming up through here, out there, and corresponds with this wedge right here. And again, drawing trend lines is kind of an art, and you need to have some fudge factors around your trend lines, because price action tends to not necessarily stop exactly right on the dime, right on the penny, but will basically oscillate around it. So that's that. What am I expecting? What are we expecting if price action does in fact move on up past the 50, breaks through this line? Then we can anticipate, hey, if we get past this swing low right here, then we're back in the up, the major uptrend type mode. We will see if that does in fact transpire going into next week. What am I looking at? TSI tick up. I'll be looking at what kind of a pullback. We're going to get a pullback to the midsection. How about the 2650 level? We shall see whether or not that does in fact take place or not. Right now, for a Friday, exceptionally powerful. What are some of the drivers for the move up this morning? Well, one of the drivers could be that while the market was a little bit unhappy with the Fed statement that came out and basically reacted negatively to it, at the same time today the non-farm payrolls came out and were just kind of a mixed bag. Some weak, some strong. And so with the uncertainty and the lack of clarity, it may give the market the sense, well, the Fed's going to delay in doing any more rate hikes for a while. But you go and you check out the I think the CME has a web page on it that talks about the probability of the Feds raising the rate in June, and it's like 98 or 99%. So low volume, big move, Gary. Yeah, it can be definitely an issue. It basically is telling us, yeah, we're getting this big move, but what's the conviction behind the move? So, and let's see, we still have, almost not quite 2 hours, but an hour and 45 minutes until the close. If we hit these moving averages, it may pop up, hit these moving averages, but if it sells back off and actually closes back below the 820 combo, that would be significant, telling us that prices were rejected and rejecting the higher levels. So that's what we got for the S&P. Again, even though we're having the big move, within the context of what's going on here, what's going on in this is basically we're still in the triangle and or wedge, whichever one you want to call it. NDX, similar type situation. NDX is had stayed a little bit stronger above the 50, moving. Was it going to move back up into this resistance zone here where it fell before, where it failed, before? We shall see. I mean, it is breaking up back above the trend line, so that's a positive. And so one could, if we close where we're at right now, we could consider this wedge broken. But again, as Gary mentioned, is it a low volume kind of breakout, or is it just not that strong? And so longer term, TSI weekly looks like it wants to rally. Where might it rally to? If we continue to push up and we can get past this level, this zone of resistance at the 6,900 level, which corresponds, we can just kind of make that our ceiling. Then we could, in fact, push all the way back up to the 7,100 or even up to close to 7,200. So what else we have going on here? Let's take a look at the Russell. Russell, nice bounce. TSI tick up daily, weekly. Nice bounce off the off the 100. Broke back through the 50, the 820 combo, and isn't kind of interesting from this low, this high, it did almost, it came within just a couple of dollars of hitting a 618 retracement, didn't stay below it very long, matter of fact, only intraday, and then pop back up, and then the next day gets a rebound off the 100 and the off the 50, and now it's broken back up through the 38.2 retracement. And the expectation, well, the expectation is at least get back to this downtrending line, which will put it up there about the 1583 level. But it too, it being the Russell, still working within this this larger wedge, and so we'll earmark it, and look, if we get up to the 1580 to, let's say, 1585, 84 level, we'll see if we get any exhaustion and a roll back over to come back down. Right now we just we have to wait for the doggone reversal candles. So I hope that helps. So if you are a premium active trend trader member, please look at right here. You should have in your answers. We had some technical difficulty with the email application that sends out our notifications. So the link for the webinar that goes off at 12 o'clock for the final hour is basically listed right there. You should be able to all see that. And in fact, I'll put it, where else can I put that? There we go. And I'll send this out to everybody. There you go. So we shall see. We'll see, you know, if we get some kind of a pullback at the end of the day, because it'll be very unusual for a Friday. If this closes without any upper wick, that could be construed as, you know, an exceptionally strong move on the Russell. And so again, we'll have to wait till the close, another hour and 45 minutes away. Hey, let's take a real quick look at a couple of stocks that we are watching going into gold. Gold, as you can see, has been down on a daily chart, has been down here around the 124 level. Remember that gold tends to go into a little bit of a buying frenzy in the June-July timeframe. It is bouncing here off the 123 level. This, you know, might be an area where you say, hey, you know what? If we get a retest down here at 124 or even down at the 123, I might want to look at doing you know, buying some calls that are go out to like September or October. They're fairly inexpensive. I won't say they're cheap, but you know, let's take a look at those real quick. Let's roll this over here. Gold, GLD. Yeah, let's get rid of that. Let's go out to September, October. I don't want to go out to October. I can go out to the first part of September, to the monthlies in September. And at the money, let's say $125 call would be worth about $3.75 to $3.65, the bid ask. And so having like 5 of those, you know, anywhere from 3 to 5, or even, you know, 10, depending on what your account, what risk you want to be taking on. 5 would be a risk of about $1,200 or so. No, 5 would be closer to about $1,700 worth of risk. And if you just, especially if you just let them go out, you know, let them just reset that. And let's go out. Let's go out here to. Let's go back. Let's go to the August time frame. And as you can see, if price didn't move at all, that 125 would be worth $1.70. If it didn't move, now if it went down, it'd be worth less. But let's say it goes up and meets half your objective. What would be the objective? Well, the objective would be to get closer back up here to this 129 level. So let's say it gets up to, you know, let's say the 127 or the 127 level, which is about, let's give it about $2-3 from where it's at. Let's say $3. And so $3, that same, well, it would basically, if it ran up that much, you would be able to you know, the loss would be very small. If it did it, and it tends to do it a little bit more quickly, let's say it did it by the 20th of July, well, of course, then you would be up to about 418. But something to keep a look at, because let me take it up all the way to, let's see, it runs to the extent of how far it could go, which is about 5.4. Okay, then you make about a couple of dollars on the individual calls, but they just be sitting there working behind the scene. You could sell calls against it, but that's just a thought. Anyway, so gold, keep in mind that in mind. If you don't want to go gold, you can go GDX, which is the gold miners. It seems to be going. JNUG is another one on a daily chart. It came down here, found some support just about the 1351 level, so it was in its support zone and is rebounding back up. Needs to break through the 1646 level to move on up to the 20 level. That's a possibility. Since it has broken back up, you can trade it off of the 820, which is any price at about 1461. And especially if gold continues to move on up. The one thing that we'll want to keep an eye on, though, is if interest rates do continue to pop back up, and if the dollar continues to rally, well, gold's supposedly not going to rally. And so that would hold back the issue with gold. So I will leave you with that. Here's where we're sitting on our entities as of close of business today. Is that right? Yeah, that's right. Okay. No, I think this isn't right because it looks like it's not capturing a couple of trades we had going on with Tesla and Alibaba. Just remember, here's the seasonality in gold that I was talking about down here in the June-July timeframe. We'll tend to get a pop out of that. Seasonality in NASDAQ. We're approaching the June-July, May, June, July. May can tend to just drive sideways a little bit, and then June, July, hopefully a nice pop out of that. Going up to the Russell. Russell, kind of a similar type of thing. A little bit of just sideways trading through, through the May, June, July. Some potential, smaller moves. But then October is when the Russell tends to really get its bid and take off. Here's where we're sitting. Big move, but will we get traction from this move? With traction, will we get traction from this big move up? We're going to have to wait and see. We don't know at this point. We had some really nice moves. Here's the move on UCO. That was a strategy 1 trade. We booked 1582 in profit. We had a grub trade that we basically lost on, $359. Then we strategy 2 trade with Tesla. Didn't know if that was going to come in or not. Came in very nicely. I think it came in the day of earnings before, and we closed that out. It had been, down over half of its value and wound up buying it at 1170, selling them for an average of 1555, and just a couple of contracts because we're trying to generate just a little bit of cash flow to continue to get that cash flow going. Entered pre-earnings trade on BABA, wound up with a nice little profit of about 161. Our earnings trades for strategy 3 on Tesla and BABA went really nicely, 875 on profit on Tesla and 512 on BABA. And that closed out the day. And then again, thinking we were going to continue into a into a downside market, we got stopped out very quickly on our spider trade for a loss of only $76. Oh, just that. Whoops, go back here. Yeah, so right now we're averaging through the first 18 weeks or 16 weeks of the year, about $429 per week in cash flow. Our target is somewhere between 500 to 1,000. So just remember, 2018 is a year of breakthrough and restoration. You can contact me or check out the other stuff on active trend trading at these 2 locations. And then there's also always the active trend trading website, which is basically has a really nice, fresh, new look. And so that's absolutely fantastic. So for the premium members, we'll be getting going with the final hour in about 30 minutes. So until next time, or until Monday. Actually, there will be no webinar on Monday. Yeah, those of you who are BAM members also, you probably noticed that I sent out an email saying that I would not be doing the BAM webinar tomorrow. We have some emergency surgery that has to be done to one of our pets. And so not a happy camper with that. But again, join us for the, if you're a premium member, join us please for the final hour. And until next time, God bless, aloha. And as I say here, aloha, trade well, and prosper. Good day, everybody.